and welcome back to Financial Podcast. I'm Olivia. Today, we're diving into a major market-moving event, President Donald Trump's latest tariff threats specifically targeting tech giant Apple and the European Union. These pronouncements, made on Friday, May 23, 2025, have already sent ripples across the financial markets, causing stocks to tumble and raising concerns about global trade tensions. Let's start with the focus on Apple. President Trump threatened Apple with a significant tariff, stating the company must pay a tariff of at least 25% on iPhones that are not manufactured and built in the United States. He made this demand clear in posts on his Truth Social platform. Trump claimed he had long ago informed Tim Cook of Apple of his expectation that iPhones sold in the U.S. would be manufactured domestically, not India or anyplace else. He specifically criticized Apple's recent moves to expand production in India as it looks to diversify its supply chain away from China. The immediate reaction from the market was negative. Apple's stock saw a significant decline on Friday. Shares were down more than 2% shortly after the market opened. This followed pre-market trading where the stock dropped more than 3% to a price of $194. Other reports indicated the drop was around 2.5% in early trading to just over $196. In pre-market, shares fell 3.7% to $193.90 and 3.5% in futures trading. While shares initially fell, one report noted a bounce back of 2.8% in early trading after the initial threat. Coming into Friday's session, shares were already on a 7-day losing streak. This recent drop also contributed to the stock losing nearly a fifth of its value since the start of 2025, representing the biggest decline among the group of major technology companies known as the Magnificent Seven. All three major market indexes saw declines on Friday. The Dow Jones Industrial Average fell by more than 300 points, approximately a 1% drop, or around 400 points, a 0.9% decline shortly after the opening bell, and later dropped 457 points, or a 1.1%. The tech-heavy Nasdaq dropped by 1.2%, 1.4%, and 1.6%. The S&P 500 declined by nearly 1%, 1.1%, and 1.2%. Futures for the major indexes also tumbled. These moves put the major indexes on track for significant losses for the week, down nearly 3%, erasing some gains made in recent weeks. If you're finding this discussion about market reactions and trade policies insightful, please take a moment to subscribe to the channel and like this video. Your support helps us bring you timely analysis on key financial events. Beyond Apple, the sell-off impacted other major tech stocks and companies. Shares of NVIDIA fell by 2.7% and 2%, Tesla declined by 1.5%, 1%, and 1.1%, Qualcomm dropped by 3.3% and 4%, AMD was down by 1.8% and 2%. Other notable decliners included Intel, down by 2.5%, Amazon down by 1.5% and 1%, Nike down by 2.1%, Microsoft down by 1%, Alphabet down by 1%, and Meta Platforms down by 1%. In the chip sector, Marvell Technology was down about 2%, and Micron retreated about 4%. The VanEck Semiconductor ETF also saw a decline of 2.5%. Adding to the market's nervousness, President Trump also signaled a separate hefty tariff threat against the European Union. He stated he is recommending a straight 50% tariff on the European Union, starting on June 1, 2025. Trump claimed the EU had been very difficult to deal with in trade negotiations, and that discussions were going nowhere. He also mentioned the trade deficit with the EU. As with Apple, he noted there would be no tariff if the product is built or manufactured in the United States. This threat also impacted markets, with European stocks stumbling and experiencing losses across several automakers, including Mercedes-Benz, Porsche, Ferrari, Stellantis, and Volkswagen, with declines ranging from 0.9% to 5.1%. Wall Street and European stocks fell following these threats. Industry analysts have weighed in on the feasibility of President Trump's demand for Apple to manufacture iPhones in the U.S. Wedbush Securities analyst Dan Ives called Trump's proposal a fairy tale and stated that the concept of Apple producing iPhones in the U.S. is not feasible or realistic. According to Ives, a full shift of production from overseas to the U.S. could take between 5 to 10 years. Furthermore, he estimated that such a move would result in the cost of an iPhone soaring to around $3,500. Ives noted this price point would be a non-starter for Cupertino, referring to Apple's headquarters. Another analyst, Barton Crockett of Rosenblatt Securities, told CNBC that Trump was asking for the impossible. Jamie McCowan of Enders Analysis highlighted that Apple's reliance on Chinese production remains a concern, noting that nearly half of Apple's revenue hinges on China, which presents risks as trade tensions escalate. Trump's tariff threats come in the context of his broader trade policy, where he has pushed companies to shift manufacturing to the U.S. or face the costs of his levies. He previously announced wide-reaching tariffs on U.S. trade partners in April. Earlier, when Walmart suggested it would raise prices to absorb the cost of Trump's tariffs, Trump warned the company should eat the tariffs. Apple CEO Tim Cook reportedly met with Trump at the White House earlier in the week, although it was not immediately clear what they discussed. Apple had previously announced in February a plan to invest more than $500 billion in the U.S. over the next 4 years, including plans to build a new factory and hire 20,000 more people. The U.S. administration had previously exempted smartphones, computers, and some other consumer electronic devices from reciprocal tariffs imposed in early April, and also excluded them from a 10% across-the-board tariff, making this new direct threat specifically targeting iPhones notable. The renewed concerns about global trade tensions, reignited by Trump's posts, caused volatility to return to markets on Friday. The unpredictable nature of Trump's trade policy and its potential impact on economic growth and corporate profits were highlighted. Companies like Deckers Outdoor, the maker of UGG and Hoka shoes, cited macroeconomic uncertainty related to evolving global trade policies for declining to provide full-year guidance for fiscal year 2026. Ross Stores also pulled its financial forecasts for the full year, citing pressures on profitability because more than half the goods it sells originate in China. Workday shares also dropped after its guidance. The market worries extend beyond just tariffs on Apple and the EU. Traders are reportedly nervous about Trump's broader economic agenda, which includes a proposed $2.7 trillion tax and spending plan that is drawing scrutiny. Moody's recently downgraded the U.S. credit outlook, citing ballooning deficits, adding to the factors rattling market confidence and increasing risk across sectors. The impact of the tariff threats wasn't limited to equities. In the bond market, Treasury yields fell, with the yield on the 10-year Treasury easing to 4.50% from 4.54% the previous day. This follows earlier increases in yields due to worries about how potential tax cuts could add to the U.S. government's debt. The U.S. dollar index, which measures the dollar's performance against other currencies, was down 0.5% at 99.43. Meanwhile, the price of gold climbed, rising 1.6% to $3,350 an ounce, as investors sought traditional safe haven assets amid the downturn in equities. West Texas Intermediate Futures, the U.S. crude oil benchmark, slipped 1% to $60.55 per barrel. Apple's strategy to diversify its supply chain is ongoing, aimed at reducing its dependency on China. This includes expanding its production presence in India. However, analysts suggest that shifting manufacturing to the U.S. as demanded by President Trump is not feasible, would take years, and drastically increase costs. If the proposed tariffs were to take effect, it could cause short-term disruptions and likely lead to higher consumer prices for iPhones. This could also have ripple effects across other electronics makers, chip manufacturers, and U.S. retailers who sell Apple products. Overall, President Trump's latest tariff threats against Apple and the European Union have quickly reintroduced significant uncertainty into the global financial markets.
The reaction in stocks, bonds, and commodities on Friday indicates that investors are sensitive to the potential impact of these policies on global trade, supply chains, corporate profits, and economic growth. The market is showing signs of caution, with analysts deeming the demand for U.S.-based iPhone production unrealistic and highlighting the potential for disruption if these tariffs are implemented. Before we wrap up, if you found today's episode informative, please show your support by liking this video and subscribing to the Financial Podcast channel for more updates and analysis on the events shaping the financial world. Thank you for tuning in to Financial Podcast. I'm Olivia, and we'll continue to monitor these developments closely. Stay informed, and I'll see you next time.